The conventional wisdom maybe 50 years ago was that the CEO of a publicly traded company had an obligation to get the most profits legally that he could get or she could get. Today, the conventional wisdom seems to be if you're very good on ESG factors, that's going to be a good thing for your company. But is there any evidence that if you are really good at ESG factors, your company will actually perform better and your stock will be better?
Well, let me answer the question in a different framing. I believe stakeholder capitalism, which ESG is a part of, is a major component of how business leaders and their board are moving forward. And there's quite a bit of evidence of companies that are focusing on stakeholder capitalism, their employees, their clients, the communities where they're working. Their shareholders are going to be the biggest beneficiary, and we're starting to see that in quite a bit of evidence, even in you asked it, framing it with the ESG, even companies in hydrocarbon industries, those companies who are more and more focused on ESG strategies and stakeholder capitalism, they're trading at a higher PE than some of the companies that are in denial. And so we are seeing this reallocation of capital within industry, within companies in industry, that we're seeing capital moving towards more and more of these companies in terms of their performance, and it's being validated by their profits. But this is a long journey, David. I'm not here to suggest all companies that are totally focused on ESG or stakeholders are all going to be perfect. And we're going to have to see, are they keeping to their commitment over a long period of time? But in the last few years, as we have evolved, the purpose of a company, and as we are now raising questions, what is the true purpose of a company? You raise the purpose that is profitability for your shareholders. I think that is evolving and changing. That as that purpose is evolving and that focus towards your clients, your employees, and your community, especially in a deglobalized world, we are seeing more and more evidence of the best companies with those factors in each of in the different of the industries, they're outperforming their peers, and I think that will continue.
So, Larry, your company is the largest money manager in the world. And when you started the company, I think in the 1980s, probably ESG was not as big a factor as it has become. So as you are looking at other companies on their ESG factors, what should somebody look at you at and say what you are doing that is good for ESG in terms of the large company that you run?
Well, when I write my CEO letters, I have to ask myself, are we doing what I'm asking other companies to do? So I frame every letter with the idea we better be doing as much, if not more. And I think, so this past year, I asked more and more companies to report under SASB and TCFD. And we are reporting and are more and more transparent toward this. And our rankings within SASB are quite high. We're evolving and changing. But David, we're not perfect. We make mistakes, and we're evolving. We're trying to work on our diversity metrics at BlackRock. Our compensation metrics are strong across the board, but where we were weak in some of our issues, we were not placing some of our women in the highest paying jobs at BlackRock. And now we're trying to evolve that and moving them to the portfolio management team. So we're doing a lot more prescription in terms of navigating BlackRock to do what we're asking other firms to do. And I would say we've made a lot of progress for that. It would be irresponsible if BlackRock is asking other companies to do something and we're not doing it. So I would frame it that we are as focused on these issues as any company.